Okay, thanks everyone for joining us today. For today's webinar, Franchise Spotlight, Employee to Entrepreneur. I go to a quick hand raise from attendees letting me know that we have good audio. Thank you. So as you see, we have many expert presenters today here with us. First is FranNet franchise consultant Erika Davis. We also have Mohawk Valley SBDC business advisor Paul Arvantides, FranFund senior funding consultant Tara Thomas, and then we're also delighted to have Deborah Cohen, franchise developer for Real Property Management, and Real Property Management franchisee Jim Lawson on hand for a discussion about franchising. And finally, Valerie Schaudy, SBA Lender Relations Specialist, will be on hand to answer your questions about how SBA loan programs can help fund your franchise. Your host for today's webinar is the Mohawk Valley Small Business Development Center. I'm your moderator, Zach Steffen, Associate Business Advisor at the Mohawk Valley SBDC. If you have any questions for any of our presenters or guests, please don't hesitate to type them in your questions box. We'll be having a Q&A session at the end of the presentation. And with that, I'll turn things over to Erika.
Wonderful, Zach. Thank you. And hello, everyone. Thank you for joining the Employee to Entrepreneur webinar brought to you again by Mohawk Valley SBDC office and FranNet of upstate New York. So we do have a ton of information to share with you in just this 1 hour's time. So I do want to get started. This webinar is focused on business ownership, as you know by now, specifically our panel of experts who you will meet shortly. And I will be talking to you today about considering business ownership, especially in our current environment, all right? So my name, need to get to my, switching my slideshow here. Sorry about that. Oh, here we go. Erika. Okay, I've got it now. Thank you. I think, yep, here we go. So, again, my name is Erika Davis. I am a franchise consultant with FranNet. I serve the central New York area, so Syracuse, Watertown, down to Binghamton, across to the Utica, Rome metro area and surrounding areas. I've spent most of my career as an entrepreneur, building and operating businesses, but my passion now is to assist others who want to get into business for themselves. So FranNet is a 30-year-old company. There are around 100 of us around the country and internationally, and we are regionally based, which is a bit different for franchise consultants. That gives us the opportunity really to get to know our clients really well and work closely with them to help them also with local resources and information. So our main role as franchise consultants is to assist individuals who are considering business ownership.
Paul, if you could give us a little bit of a chat about the Mohawk Valley SBDC and your role there and your services that you provide there.
Sure, no problem, Erika. So those of you who are not familiar with the SBDC, SBDCs are a partnership with the SBA and New York State, and we have 22 offices around the state. Our office is located right in downtown Utica, and we provide free one-on-one business advisement, training, and research to entrepreneurs. So we work with people that are exploring business startup, purchasing existing businesses, or starting up a franchise business. So Eric and I have worked together in the past, and we're very familiar with the process, and we can be an asset in that area. So what does a business advisor do? What do I usually do? We work in any form of startup assistance, and it just could be from exploring business opportunities or an idea that you might have and you're looking to start a business. We work on business plan development and also financial projections, which is a big part of starting up your business. And if you're seeking financing to start your business as well, those are things that you will need. We work with you on finding sources of financing. We can work on marketing or advertising, operational issues with businesses. We work with existing owners as well and any issues they might be having, or maybe they're looking to expand a business. We have a government contracting bidding service. So we work with businesses that are in that space looking to bid on government contracts. And basically anything to do with a small business operation or startup, we're here to help you. And our services are 100% free. So as you explore business ownership and business opportunities, we can provide you with research, market research, and data as you look at that opportunity to see if it's viable and if it's a good fit for you. So we'd be happy to help in any area like that. So thank you for having me, Erika.
Wonderful. Thank you, Paul. Appreciate you sharing all of that.
And I'll be around for any questions at the end as well.
Great. Thank you so much. Okay, so I'm just going to move through and talk to you guys for a few minutes just about that sort of the consideration from going from employee to entrepreneurship. And some of you might be in different situations here, but you know, this is what we really see as far as why people decide to get into business for themselves, especially if you've been, you know, working for somebody else for a really long time. So a lot of it has to do with success in general, right? But what does that mean for people? Fulfillment, flexibility, independence, right? What does it mean for you? A lot of times it means having more control over things, right? Or financial security. We talk a lot in our industry about job security versus income security in the future too. And for a lot of people, that might mean, you know, sort of not wanting to deal with layoffs anymore, or maybe forced relocation and that kind of thing. So in essence of time, I usually do a poll here, but I think we're going to go ahead and skip based on, I'm sorry again about my technical issues here, but I want to talk to you a little bit about the 3 different kinds of business ownership, right? So one way is to start business from scratch, right? I did that. I owned a bookstore coffee house for 10 years in my hometown. It was all from scratch, and I certainly understand the advantages and disadvantages of that. Another way of getting into business is to buy an existing business, right? You may have a business in your hometown that you just know has been very successful, and all of a sudden it comes up for resale and it's a strong consideration for you. Another option is to buy a franchise or to invest in a franchise, become a franchisee. Does everybody hear me okay?
Yes, Erika, thank you.
Okay, I wanted to make sure. So one way to look at all of this is to kind of look at the advantages and disadvantages of each type of business ownership. So from starting from scratch, right, some of the advantages are that you have that total control. You can make all those decisions. You have that room for creativity. So, you know, people who are starting a business because they have a product that they invented or something like that, right, that would be a real advantage. No predetermined rules or regulations. There could be a large upside, right? Think about Amazon and how they started from scratch and where they went and where they're going. So, and again, you're building that business from passion. Some of the disadvantages of starting from scratch is that you do have to create those systems. You know, I think probably 5 years out of 10 that I own my business, we are still creating those systems, really. So some of the other disadvantages are, you know, limited financial options. A lot of times banks don't love lending money, right, to businesses that are just starting up from scratch. And a lot of times slow ramp up too. You're looking at maybe 3 to 5 years before profitability. And of course, businesses from scratch, you know, they do tend to have a high failure rate. So what about buying an existing business? Well, lots of advantages you can see here. Cash flow, you know, existing immediate cash flow is one. You have those actual financial results to really review in your research. Again, attractive to lenders, or more attractive anyway. You have that existing customer base, existing employees. Some of the disadvantages can be, again, you might think there might be goodwill out there with your customers and your employees, but in the end, you find out that there's you know, potentially some bad will out there that you have to fix, or poor training and support that you have to fix, right? And again, you know, there may be a higher debt service and that kind of thing with buying an existing business. So let's go over some of the advantages and disadvantages of buying a franchise, right? So one of the big advantages is you have that immediate name recognition, licensed trademark to use. Very importantly, you have those proven business systems, the training and support there. You tend to have a lower cost, especially with regard to or compared to buying an existing business. have more financing options, which we'll talk to Tara and Valerie about. And you have that franchise family, typically a culture. And what's really important there is that you're finding the right fit with the franchise that you might decide to invest in. And that's such an important piece of it. And some of the disadvantages of buying into a franchise or investing, you may have fewer industry options. You might be really set on, marketing a specific product and service with your business, and that might not be something that you can find in a franchise concept. You really do kind of have to follow those structured operating systems, right? They know what made their business successful and they want you to follow it. That can be different between some franchises and others. Some are more strict that way. That's another consideration if you're thinking about franchising. You may have territory restrictions. There may be a franchise you're really interested in and they're sold out in your territory. And you do have those ongoing loyalty payments. So in franchising, we do like to talk a lot about, the fact that you're in business for yourself, but not by yourself. And I think another point with all of that is that, you really are still owning your small business in your community. You're bringing, a business into your region and community, but you're not doing it by yourself. So I hope that's a little bit helpful as far as talking about different kind of business options. I want to talk a little bit about the current environment. It's so important right now. Without a doubt, the world is living through a challenging moment in real time. The root cause of our shared anxieties in direct proportion, right, to the uncertainties we're facing right now with the pandemic and our economy. So emotions are heightened, right, with fear and worry. But despite all the uncertainty, it's really interesting. There is some good news out there, and I think we're going to hear that from our funding partners here today too a little bit. But also in the franchising world, that indicates that many people are feeling a bit more optimistic about the future of business ownership and the opportunities that might be on the table once we have gotten through the worst of the pandemic and its impact on our economy. So as an example, there was a survey done, and I'll be real quick here, but a recent survey was conducted by a major franchise trade group, revealed some surprising results on franchise activity. 66.4% think that now is a good time to start a business, and 55.9% expect to start a business within the next 3 months. So that might really come as a surprise to some of you. People in the survey were also asked, have you decided to put your business startup on hold? Well, not surprisingly, right, back in March, 20% of people were saying, yeah, I'm putting the brakes on right now because I have no idea what's going to happen. But in June, that went down from 20% all the way down to 7%. So people were, as businesses were opening up, people were starting to think about, starting up their own business as well. So let's see here. So the real question is, right now, and I'm assuming that, business ownership is on your mind if you're here with us today, but, are you concerned about the economy and this impact on business ownership? And one of the things I like to talk about here, and we always talk about this, but especially now, are, looking at lowering the risk of business ownership with specific businesses and specific market characteristics. So very quickly, some of those would include businesses that tend to be recession resistant, and some of these have been pandemic resistant too. Senior care services, residential home and home modification, essential services such as automotive, right? People during a recession would be more likely to fix their car versus buying a new one. Commercial cleaning services, as we can imagine, biohazard cleanup, residential and commercial right now, not only have some of those survived during, the pandemic, they are really thriving right now because business is up. And a lot of businesses that provide for other businesses, right, B2B services and that kind of thing, tend to do well during recessions and have done well too during the pandemic. So one of the things I want you to think about is how are you going to proceed if you are interested in pursuing business ownership right now? And we're really finding that, there are really kind of three ways people are thinking about this. And it is such a personal decision right now. Again, as we saw in that survey, a lot of people have hit the brakes, and that's totally understandable. We get that. Business ownership isn't for everyone, and especially right now, a lot to consider there and whether or not it's the right thing for you. A lot of people sort of have tapped the brakes, right? They're proceeding cautiously, with regard to, seriously thinking about business ownership, but they may be starting the research right now, knowing that it takes the time. It takes time to do that due diligence and to actually get to opening. And a lot of people are full speed ahead at the moment. They're thinking this is the time. They're taking advantage of opportunities, low interest rates, increased vacancies, which is very unfortunate for some, but this does happen. Lower costs to get into business right now. So there is a potential for, huge economic opportunity on the other side of this. And some people are like, I want to be ready for it. So they're preparing now. So that they can take off when they want. So the big question for you is, kind of where are you on the traffic light of considering business ownership? So, and again, I think it's really important to think about here that, searching for an opportunity and doing that due diligence and research is not the same as, committing to the purchase. So I wanted to go through a quick timeline with you. This is just all about, but I'm gonna hand it over to Tara so she has enough time to talk to you about funding. But just very quickly here, as you're looking at this, if you thought about the idea, and this is something everyone should think about, when do they want to start to see income out of the business? Say it's July of 2021. Well, that really means probably most likely, and at a very minimum, that you're looking at needing to open your business in January at the very minimum. A lot of franchises say 4 to 6 months to ramp up, which is actually pretty short time period considering, a lot take years to really find that profitability. But you can just see here very quickly all that needs to happen before that. That's starting the research, the funding, right, that needs to start early so that's in place when you're ready. If you're looking at a franchise investment, signing and the contract and those things take time, and then the training that goes along with that, or your preparations and opening if you're opening your own business from scratch. So just wanted to point that out there, that again, it tends to be that everything takes more time and money. I do want to say that business ownership isn't for everybody, franchising isn't for everybody, but to start that research process to really find out and do it the right way is so important. So with that, I'm going to hand it over to Tara, and she's going to talk to us. She is with FranFund, and FranFund is a funding partnership of FranNet, and she's got a whole bunch of information for you about funding a business. Thanks, Tara, and welcome.
Thanks, Erica. Can anybody see my screen yet? Let me just make sure we're here.
Yes, we can, Tara.
It's the right one. There we go. All right. So thank you so much for having me. And my name again is Tara Thomas, and I am with FranFund. And today we're just going to talk through some possible funding solutions as you all consider small business ownership. There are many different means of funding, one being equity funding. Typically, we see that at a higher level, at a franchisor level, those angel investors, people who are looking to buy bigger corporations, debt funding, which can include financing, SBA lending. Cash is always king. People have the ability to have cash or maybe use a 401k rollover program I'm going to speak about, and then asset-backed leasing. So a lot of times there's equipment involved, and there's the ability to finance some of that equipment. So in my short time today, which I usually take about 30 to 45 minutes to talk with a client about, but I want to talk about our Fran plan. That is often referred to as the 401k rollover, or the ROBS program. That stands for Rollover for Business Startup. This program is eligible to you through the ERISA Act of 1974, and it allows you to use eligible retirement savings and invest them into your business without any income tax or early withdrawal penalty. We're typically going to be using a previous employer 401k plan, maybe you have a 403b, 457, TSP. There's many different types of retirement accounts that can be utilized. Just usually not a current employer, as they don't allow them to roll out while you're still employed. So in this strategy, we create a C corporation for you. That would be your operating entity. That C corporation then adopts a new retirement plan, which we create. And you as a W-2 employee of this new business, you're allowed to invest whatever amount from your retirement savings that you choose into this new C corporation. There's no limit with this strategy. If you find a business that's $250,000 to get into and you have that amount in your retirement plan, you can utilize it. That new retirement plan transfers all of that cash into your business checking account in exchange for shares of stock. So it's a little silly and strange to think about, but in this situation, your 401k plan is a shareholder in your business. Then you have that cash sitting in your business bank account that you could use for any legitimate business expense. Those initial franchise fees, marketing costs, inventory, equipment, payroll for employees, including yourself. The great advantages of using the Fran plan is you can utilize this and not have an SBA loan, so you don't have the overhead of a monthly loan payment. It helps you to cash flow faster. It's the quickest means to funding today. It typically takes us about 3 to 4 weeks to complete, and there's nothing to apply for. It doesn't matter if you have a good credit score, if you have outside income, if you need to use collateral for a loan. Again, there's nothing to apply for. It's just whether or not you choose to invest this money into your business. And many clients have found that they're actually able to get a better return on investment while investing into their own business versus the traditional market. So it is not a loan. It is absolutely still an investment that can continue to grow. At Fran Fund, we offer a free safety net program. Basically, that's that first step of the rollover. And what we do is we just get those funds consolidated and into a rollover IRA so they're ready to move. And if you decide to move forward with a small business and using the 401k rollover to fund it, we can get it done in as little as 2 weeks. And just a quick snapshot there, if you were to have $150,000 in a retirement plan, people will say, well, what if I just take a distribution? If you take that distribution, you are then obviously going to be paying income tax. If you are below the age of 59 and a half, there will also be a 10% early withdrawal penalty. So you might only have $90,000 to utilize of that $150 taking a distribution. In this strategy, it allows you to use all of those funds dollar for dollar, and you're able to capitalize on those pre-tax dollars. Now let's jump into SBA lending. SBA lending, typically, a traditional 7A loan goes all the way up to $5 million. Today, we're going to hit on both SBA Express and 7A. And basically at Fran Fund, we offer a loan consultation service. We help clients to obtain these small business loans by helping them to develop and offering templates on business plans, financial projections, and performas, all of the documentation that lenders will require. And we network with lenders across the country that are not afraid of writing loans for these types of startups, as we've been able to educate them on the franchise brands that we work with. So it just becomes a much more efficient and less painful process than you may expect if you were to work with a local bank. On a 7A loan today, 7A loans are going to be for your brick and mortar, something that there might be build out or construction. They're going to want to see strong, favorable credit history, a high credit score. You're going to need to have about 20 to 30% cash injection. The banks want to make sure that you have some skin in the game. They're never going to lend you 100% of what's needed to open that business. Usually the largest portion of that cash injection is by you paying a franchise fee. They'll also require that you use personal assets to secure the loan itself. And the first thing they're going to look at is real estate, where they would likely place a lien on real estate and the equity would serve as the collateral. And they also want to see that you have enough outside income and or cash to be able to cover a burn rate. Basically 9 to 12 months while the business is ramping up. They want to make sure that you have some outside income or cash to cover your personal expenses, this new bank loan payment, and if there is any lease or rent for the business location itself. Again, 7A loans go all the way up to $5 million. This just kind of covers what can be included in that loan, and we'll be sure to send that out to you as well for a lack of time. So SBA Express loans. Express loans are really great products. They're really meant to be a working capital loan. So they are going to be a really, really great tool for those service-based businesses like the one we're about to hear more about. That's a great concept for using an SBA Express loan. So they're going to be looking for the same for favorable credit history. The cash injection for an Express loan is only 10%. That is a minimum, as there's some things that are required in order for you to get the bank to release funds to you, and I'll kind of talk about that briefly. Another change that we're seeing on Express lending is after that 10% goes into the business, the lenders just want to see that you're not putting every dollar that you have into the business, so they're actually requiring that you have about $50,000 of cash sitting in your personal savings or checking to fall back on when and if needed. The other difference on the Express loan product specifically is it does not require that personal collateral such as real estate. You're always going to be signing a personal guarantee, but there is no personal collateral requirement, and this loan maxes out at $150,000 borrowed. These loans typically close a little bit faster, maybe about 30 to 45 business days, as long as you have executed franchise agreements. You also would have to have a certificate of completion of training. If there are any licenses that are required for you to operate this business within the state, those would need to be in hand before the loan can be closed. And those are also things that you just would have to be aware that you'd have to be able to self-fund before the bank releases their funds to you. So that's where I was saying, while that 90-10 split is very attractive, it oftentimes costs more than 10% to get to the point of you obtaining all the items needed to close on that loan. At FranFund, we offer a very stout free pre-approval process. So we use our proprietary FranScore report. This report is based on 20 years of franchise-specific loan history data. So it provides us with a soft credit score on you as our client, but we never show up as an inquiry. It's not a hard pull, and that it also provides us with your SBSS score, which is your small business credit score, based on whatever franchise concept you might be considering. That is very important as the lenders are looking at that. Our pre-approval process is absolutely free of charge, no obligation, and it just gets you a pre-approval letter in hand that you might be able to present to franchisors as you continue conversations with them and know that you have a path for funding moving forward. I will also mention, especially for maybe one of those 7A loan products where you're going to be using and needing a higher % cash injection, it's not unusual that we're going to see a combination of both the 401k rollover and an SBA loan. And we try to make it as easy as possible so you can do that all in one place. We have a 99% success rate in terms of obtaining loans for the people that we've provided a pre-approval letter to, compared to the national average of about 38% for people who might just be walking into a bank and trying to obtain a loan themselves. We are also very big contributors to VetFran, part of IFA, so we offer military discounts and veteran discounts for our friends on the 401k rollover, and while there are no special lending programs for veterans today, there are some banks that will kind of discount some SBA guarantee fees or lending fees, so we always make sure to try to take advantage of that. I know we're saving questions for the very end, so I will leave some time, but on that screen is my web address. There's some more information there, a video on our lending solutions, as well as a link to schedule some time with me, as well as my phone number and my email address. Thank you.
Great, thanks. Thank you, Tara, so much. That's a lot of information for a short time, and we appreciate you doing it in that way. And again, questions for Tara and Valerie at the end are very welcome. So I do want to move along here and introduce our franchisor and franchisee. Deborah Cohen is a franchise developer for Real Property Management, and Jim Lawson is the Buffalo franchisee owner for Real Property Management. So I want to welcome both of you.
Hi.
Hello. Hello, Deborah. Hi, Jim. Hey, so let's get started with a Q&A with both of you. This is when we can really start to understand what it's like to be a franchisee. So Deborah, let's start out with you. Tell us a little bit about Real Property Management, your role there, and what Real Property Management does, both as a business and a franchisor.
Well, terrific. First, let me just introduce myself. I am a franchise developer for Real Property Management, as Erika mentioned. My role at Real Property Management is to interview candidates nationwide who are interested in starting a property management franchise. We are looking for the right candidates in the right markets who want to start a business like this for the right reasons. And then once I've identified those candidates, I help them navigate through our discovery process and provide as much information as possible. Make sure we can decide together whether or not we're the right fit. As a brand, we are highly invested in the success of our owners, which is really why my role is to vet candidates as thoroughly as possible. Just a little background on Real Property Management. We are the North American leader in the property management industry. We've been in business for more than 30 years, and we franchised in 2006. We now have 350 locations across the United States and Canada. In early 2018, our success caught the attention of our now parent company, Neighborly. And for those of you who aren't familiar with Neighborly, Neighborly is the North American leader in the home service franchise industry. They are an international franchisor, and they own 25 home service brands, all in the repair, maintain, and enhance home space. We are all the premium service providers in our respective fields. Some of our other brands are Molly Maids, Mr. Handyman, Mr. Rooter. There are well over 4,000 franchises in the Neighborly family, and that gives RPM some really nice benefits from an economies of scale standpoint. We offer discounts and rebates, or in some cases just create unique revenue streams for our owners because of the large provider that we are in the home service industry. As for the property management industry, we are experiencing some really incredible growth at the moment. Right now, we are a renter's nation. 34% of Americans are renting homes, and we are continuing to see some pretty exciting growth in the industry due to several factors. First and foremost, the housing crisis and the tightening in the mortgage industry has made it increasingly difficult for people to buy a home. So what's happening are more and more investors and investor groups are buying up homes as part of their wealth accumulation strategy. And eventually their portfolios just get too big for them to manage on their own. And because we have a national footprint, they turn to us for help. Also what we're seeing is a big change in home ownership across multiple generations. Millennials delaying home ownership for up to 13 years, whether it's due to student loan debt or even seeing family members struggle during the housing crisis. Some of them just have a more mobile mindset. So they're choosing to rent. And at the same time, boomers are renting rather than buying. So all of these factors have led to a huge increase in rentals, which is obviously a tremendous opportunity for our franchise owners. When we first started franchising in 2006, about 64% of Americans owned a home. 70%, and that number is down to 64%, and it's expected to decline over the next 15 years. So far, it's netted out 7 million more renters today, which again, tremendous opportunity for our owners. And RPM, far and away, as I mentioned, the largest property management firm in the country. Our franchisees manage 60,000 homes, about $7 billion of assets under management, and that is only 1% of the national rental market. So that just shows you how we have just begun to scratch the surface as a brand. So that's a little bit about RPM, and I think I'll turn it over to Erika and let Jim introduce himself.
Yeah, great. That's really interesting, Deborah. Thank you for sharing all of that, because those trends are something that most of us aren't thinking about or that we're not aware of. And I was talking a little bit before about recession-resistant businesses, franchises, concepts, and it certainly seems that based on the trends happening right now, that's never mind what's going on with the pandemic, that there are other things that are making RPM, really grow and prosper right now. So that's great. So Jim, again, Buffalo franchisee at RPM. Tell us a little bit about your background to start off with and how you got started as a franchisee with RPM.
Sure. Years ago, I was a condominium manager, managed 1,000 units of condominiums at one time. And before that, I worked for a developer who owned a number of different buildings. And over time, I kind of realized that, I know enough, maybe I should do this on my own. But even that being said, I realized that everything I knew, having the back support of a back office like real property management was huge to me. I mean, I knew all the information. I knew what I had to do on a day-to-day process and run my business. But all the back office support that real property management offers, as well as the name recognition. So I had a lot of people say, well, why are you buying a franchise? And I said, because of what I just said, all the back support, which people don't always realize is valuable. It allows me to do what I'm best at. And I think we all know, we're good at this, we're not so good at that. And that allowed real property management to take the back office stuff. And what I mean by back office is, mostly accounting process.
Yeah.
The inside terminology. The back office stuff was more the accounting process, the setting up the software. If I had to produce all that on my own, that would have taken me years to become successful. But it literally gave me roughly, I was making money probably 8 months down the road. And that had more to do with, location. Buffalo, we're about 1 million people, but we had a lot of competing businesses here. We have a lot of developers who own larger properties. I don't manage large complexes. I do a lot of single family, doubles, triples, and fourplexes. So I found my niche, which allowed me to be successful because a lot of the developers in the area manage larger buildings, 100 units or 500 units. So that's not where I am right now. I'm open to that. If that deal came across my desk, I'd certainly take it. But I've seemed to have found my niche that works out well for me.
That's wonderful. That's great. I would expect that some people are wondering, what's it like when you're first starting out, maybe in the first year of your business? What does it look like for a new franchisee as far as startup, your role in the business, the training and support that you were starting to talk about, maybe some of your biggest challenges?
Yeah. I've had these kind of conversations before, and one of the biggest things I always say, it's about, I make my own schedule. I don't just mean what appointments. I mean, when I get out of bed, I'm determining what I do every day. Somebody's not determining it for me. I have to make that decision. Am I going to go on that call? Am I going to go to that property? Am I going to make that repair? Am I going to meet with that owner? Am I going to spend that money on advertising or, on the internet or, which way? Those are all your decisions, which I gladly took. But I kind of didn't realize in the beginning that every single one of those needed to be done. When you're in your own office and you make your own, somebody's telling you what to do and, go out and make this phone call. Well, I get to make that at both ends. I get to tell myself to make the phone call and then I have to go make the phone call. So it's kind of interesting in that sense, but it was something I was open to. Not everybody is. It's a choice that you have to make. And I think you kind of make it through. It becomes a reality at some point, like, well, I can do all this for somebody else, or I can do it for myself and make more money. And I think that's where it kind of came to. I was always motivated. I'll talk about real property management, what I do. I watch all the HGTV shows and I'm in the market all the time. I own some of my own property. I invested in student housing, and it was never a big hurdle to me. So I kind of realized where I was going. It was making that decision to, jump off the cliff. That's usually what it comes down to. And, funding comes down to that. I personally, myself and my wife, my family, funded my own account. We paid cash for the franchise, which was expensive, but reasonable, comparably. I was lucky enough that my wife has a full-time job and does well. So that helped me make my decision. It's a bigger decision if you're the sole breadwinner and everything is in that basket. I would recommend, have a couple different baskets, have a couple different streams. If you own some of your own property and you're making rental income, maybe that's your stream. Maybe that's, one of your other baskets. One of the things that Deborah brought up before about a franchise is because of the volume and the size that we are at Real Property Management, we have a deal with Home Depot. We have a deal with, phone services. We have a deal with cleaning companies. So we make extra money in different ways. Home Depot, if I spend X amount of dollars, I get a percentage of that money back each year. you know, a small percentage, but a percentage back. So all that stuff helps. And those are the kind of things that I would never be able to do if I, you know, didn't have a franchise. Those things would never come across the table.
Right, right. It's that power behind you too that can make such a big difference. Just quickly before I want to ask Deborah a couple more questions too, well, both of you really, but what it is making me, I do really want to ask you, Jim, like what finally made you kind of take that leap?
Well, simply enough, because like I said, I watch the HGTV things and all the time, and there was a guy now, he's still on HGTV now, it's Scott McGillney. He does apartment rentals, vacation rentals now, I think is his program. He actually had a seminar up in Canada that I went to, Hamilton, not too far away from Buffalo, just over the border, that I went to. And in the back of his seminar, which is very interesting, and I went because I was motivated to go, was a table, and Real Property Management was one of the vendors on those at that seminar. So I went back, talked to them, and you know, I came back to Buffalo, I talked to my wife, and then I was at work, and you know, at one point I said, you know, why am I doing this for other people? I literally need to jump off the cliff and do this. And that answers your question. That's my motivation. It was something else that kind of, I was in that realm anyways, that it wasn't a big jump for me.
So you're considering it anyway, been a while, but then it sounds like it was really the concept that you found the right fit for you. Sounds like really kind of made the determining factor. So great. So Deborah, so we know right now that the landscape of business has changed due to COVID, but and we talked a little bit about this already, but anything else as far as how Real Property Management has been affected and what the company has done to ensure its future and the success of your franchisees moving forward?
Sure, absolutely. Well, as you were talking about earlier, Erika, one of the most appealing aspects of property management is we are recession resistant, but now I can say with wholehearted confidence, we are pandemic resistant. We overall have picked up over 2,000 doors, our franchisees, since doors meaning properties under management, since the pandemic began, and we've launched 17 new franchises in 2020. So our franchisees are definitely thriving in this economy. Unfortunately for everyone else, it happens to be a very ripe economy for us. We were deemed essential in all 50 states. We did not have one office disrupted or closed. The only slowdown was on the maintenance side for non-habitability issues. You know, a lot of our tenants didn't want service providers coming into their homes, so there was a backlog there. But our franchisees, thankfully, are thriving in this economy, and Real Property Management really went out of their way to support our franchisees during the pandemic. We issued letters to all of our owners so that they could travel if ever stopped by police to prove that they were essential. We help with PPP loans. We've instituted new vendors that allow virtual showings for owners that didn't want to actually visit the properties. And we are seeing a lot more investors buying up properties as a result of the economic climate, which again is going to present a tremendous opportunity for all of us.
Yeah, great, wonderful. So to switch gears a little bit, Deborah, I just am curious, what do you look for really in a potential franchisee for RPM?
Well, we obviously look for somebody like Jim, but Jim also, many of our owners do come to us with existing properties under management or having properties of their own, so they understand the value of a property manager. But our best and most successful franchisees are good communicators because they are going to be talking to investors and they need to build trust there because they're managing one of their largest assets. They are going to be promoting themselves to real estate agents and communicating with renters. So they really need to be good, strong communicators. We like them to be comfortable with technology because all of our systems are web-based, and that's a huge aspect of running, this business behind the scenes. Again, many tend to be from a sales or business background so that they're comfortable going out and networking in their community. And of course, a high level of integrity because you are managing one of their, if not their largest asset. So those are the key qualities we look for.
Great. Can you tell us a little bit about the territory? I mean, obviously we know that Jim's up in Buffalo, but with regard to the upstate New York territory, do you have open territory here in case you're interested? Mm-hmm.
Yes, we do. And we do territories a little differently than other franchisors. We offer larger shared territories. We offer counties. So it could be the Metro Buffalo or the Metro Rochester area. And the reason we do that is because investors don't necessarily buy all of their properties in one concentrated area. And as a property manager, you need to be able to manage all of their properties. So we offer larger share territories.
Great, that's helpful. So anything else, Deborah, that I haven't asked, or anything that you'd like to share that might be helpful for somebody who's considering, franchise, becoming a franchisee in general?
Well, as you mentioned before, Erika, you're in business for yourself, not by yourself. And RPM offers unprecedented support, training, marketing, back office, as Jim mentioned, all of the support you need so that you can be in the front lines operating your business on a day-to-day basis. And I think with that kind of support, you're guaranteeing your success on, in your future.
Yeah. How about for you, Jim? Anything to add to that maybe in the next minute or so? I know we want to wrap it up and make sure that we have time for general questions for everybody. But, in your opinion, what do you think the advantages and disadvantages are of starting a business as a franchisee, maybe, versus starting a business from scratch or buying an existing?
Right. I do look to buy already existing property management companies that are closing. So as a franchise, or I can buy those and bring them into my fold and do it that way. So I do look at other companies to buy of somebody who might have started up from scratch. My point before about starting up from scratch is that even though I had a vast knowledge, it's still, I don't do everything, great. And a franchise support from Real Property Management is so important of what it allows me to do. I can do what I do good and they can do what they do good. And it's a big support system, and they do it in many different ways. It's not just one. The only thing I'd like to say is owning a franchise, don't ever think that, hey, I'm going to walk in the door and it's a cleaner, I'll deal with another business. It's a cleaning business, so all I'm going to do is clean. That's a quarter of what you do. I mean, one of the biggest things I do now in being a property management company is actually collecting rents. I mean, I'm actually a debt collector in that sense, because that's what promotes why the owners buy a property, so they collect the money so they can make money on their investment. So I literally become a debt collector in that sense. And I don't mean it in a bad sense, but that is a primary part of my business. Because if I'm not collecting rents, the owner's not making money, the tenant's not, paying their portion. So everybody loses in that case. So often realize what else you do. It's not just the clear cut, this is the only thing I do. You do a lot of different things.
Yeah, and I appreciate you saying that too, Jim, just because, when we're helping our clients, we're asking them all those questions about how they see themselves in their business, on a daily basis, and really getting down to what's important to them, what they want to do, what they don't want to do, right? Because you really can't wear all unless you're hiring out, based on weaknesses, strengths of your own. But that's such an important piece of business ownership in general that I really appreciate you mentioning that. So I'm going to hand it over to Zach again here quickly. I really want to thank Deborah and Jim for joining us today. Such great information generally about franchising. Really, really appreciate it. And again, they will be on hand to answer any questions that you might have. And let's see, Zach, I'm giving everybody your contact information here for the Mohawk Valley SBDC. And I will also say, I'll leave the screen up for a minute, and I'll then go ahead and share contact information from me, because if you have any interest in real property management, or you want to think, or if you're considering franchising, please feel free to reach out to me. So I'm going to leave this screen up here, and then I'll leave my contact slide too while we go through Q&A. But Zach, do you want to take it away from here?
Absolutely. Thanks, Erika, and thanks, Jim and Deborah. Well, so we do have a few questions here. The first question is for Tara, and the question is, when does the rollover become taxable?
Hi, that's a really good question. So just like any other retirement account, it starts to become taxable as you take distributions. So as you become of retirement age. So again, you want to think about it just like any other type of investment. So let's say you were to buy a RPM with a rollover, and maybe you use 100 or 150, whatever it is, to invest into your business, and you run that business for 5 or 10 years, all the while paying yourself salary, wages, bonuses, and then you sell that business for $200,000. the proceeds from that $200,000 sale go back into your retirement plan free tax. You made a good investment. So it grew just like any other retirement. And then as you start to take distributions as you're of retirement age, you would pay your ordinary and necessary income taxes.
Terrific. Thanks, Tara. The next question is for Jim. It says, during these times, are rent collections a problem?
Just in general, in our business, rent collections are always a problem, right? Yeah, I really haven't had much of an issue with the COVID and people not paying rent. I go to the dark side. I had 3 evictions scheduled back in April, and because of the halt in New York State, they weren't allowed to be done until mid-September, and that was put on hold for federal, so now that's not done until January. So it's nothing unusual. I mean, it's normal business practice other than the delays for the evictions. I mean, we're in that business. You're always going to have evictions and people are always going to pay rents late. It's like I do with my student housing. I require that they have a security deposit. If they break a window or something, I use their security deposit at the end to make that repair. So it's just like people owe the rent. We go through the eviction process. The money always comes due.
Thanks, Jim. So as I mentioned earlier, we have Valerie Schaudy, SBA Lender Relations Specialist, on with us today as well. And thank you, Valerie, for joining us. Valerie, was there anything that you would like to add in regards to SBA loan programs and how they might be able to help people who are considering a franchise? I think Valerie is muted. Give me one moment to try to unmute her.
Here we go.
There you are.
Thank you. Tara, from the perspective of franchise systems and folks looking to be a franchisee like Jim and join a franchise system, become a part of it, she did a great job. Obviously, they specialize in working with franchised businesses, whether you're starting from the ground up or looking to acquire one. So from her perspective of working with a network of lenders that they have and using the SBA's business loan program that those lenders offer, it's very tailored to the franchise industry. You know, outside of that, if someone was to try and work with a lender on their own, you know, it does work also. You know, there are lenders that are interested in working with small businesses that have franchise systems. So there's an option either way, but certainly have the expertise of the panel here. If you're looking at franchises, that's what they're all about.
Valerie, I have just a quick question for you. What's in a general, you know, for anybody looking to get into business right now from scratch, otherwise buying an existing business or under a franchise, what are you seeing as far as the current environment and what's happening with SBA loans?
Well, I think it comes back to in the beginning what you were talking about, Erika, that yes, we all have to be very aware of the economic times we're in now, the climate that we're in now. So lenders are looking to work with their existing small businesses that they have in-house or new ones. In addition to the traditional business planning that any business should do, regardless of seeking out funding, the key is building in your pandemic plan. You know, what's happening right now, what potentially may happen in the future to your business. You need to plan for it, and the more you plan for it, or at least outline the potentials, no one has a crystal ball, that will make the lenders out there now most comfortable in working with you with new funding requests. The doors are open. They are looking to work with businesses, but they have that extra look. You know, you have to address those issues.
Great, thank you. Tara, anything for you, sort of based on what Valerie was saying?
No, I think she hit the nail on the head. I think that, you know, we're seeing the same thing. We definitely have lenders out there that are still looking at startups, acquisitions. You know, they're ready to lend money. and we're happy to help you through the process.
Tara, we have another question here from one of our attendees. It says, for C Corps, can I take all profits to put back into the business as a tax write-off?
So I try to steer clear of very tax-related questions because I'm not an accountant or CPA. So that is a really good question for a CPA or accountant. But, you know, as the business, as there's profits sitting in the business bank account, it just is basically as an asset, just like you look at it at any other P&L. So your accountant would be a really great resource to make sure that, you know, any ordinary necessary business expenses are obviously, you know, deductions, tax deductions.
Terrific, thank you. It looks like that's it as far as questions from our attendees today. So does anyone have anything they would like to add here before we conclude?
The only thing I'd like to say, hi, it's Jim, is royalties usually come up in owning a franchise. Royalties are, you only pay a royalty on the money you make. So you're always, if you're making money, then yes, you're paying a higher royalty. But, you know, they're certainly within reason. So for anybody who's not thinking of a franchise because of royalties, if you're making money, you're paying royalties and everything's good.
Sounds good. Thanks, Jen. All right, well, thanks.
Yeah, Zach, I'll just end with, if everybody can still see my screen here, if anybody wants to reach out to me with any questions, franchising or otherwise, you can go to my website here, askerika.com. I've also included a QR code here. If you, you can use your camera to take a picture of that, and it will send show a link for you to go to where you can fill out some information and let us know how we can help you as far as would you like me to give you a call to set up sort of an initial conversation? Would you like to receive a link to our personal franchise assessment, which is something that we, you know, start off with our clients. A lot of times it's a great way to get started with considering business ownership and franchising. So happy to help in any way. Just wanted to mention that. And I thank everybody for being here today and also being patient with my technology issues. So.
Terrific. Thank you, Erika.
Thank you.
Thanks everyone for joining us today. Again, we're the Mohawk Valley Small Business Development Center. For the attendees here today, please feel free to reach out to us at any time. You can call us at 315-731-5884 or email us at spdc@mvcc.edu, and we'd be happy to speak with you. Again, thanks to everybody. We really appreciate everybody's time today. This was a great conversation. We'll be sending a follow-up email within a couple of days that will include a recording of this presentation. And after you exit the webinar, a survey will pop up. We'd appreciate it if you could please answer the questions. So again, thanks everyone and have a great afternoon.
Thanks, Zach.